Welcome friends, welcome back to my channel Finance Knowledge with Varun. So today we will discuss about the popular topic why markets are falling. What are the fundamental reasons behind that? So we'll understand in depth. So keep following. Let's start. So there are two major reasons because of which market is gradually falling day after day. So first is depreciating Indian rupee because of the high trade deficit, and the second one is because of large FI outflows. Although both the reasons are interlinked, but we will understand individually and how they are interlinked and what why are they contributing to the lower markets. High trade deficit is basically due to the high imports and the low exports. So you can see in 2024, so our imports have increased to $70 billion, whereas our exports has drawn down to $32 billion. So there has been a massive 37.84 trade deficit that has been generated, because of which our value of rupee has gone down because there is not much demand of the rupee in the foreign markets. Plus, we need to import on higher basis, like we have the demand of crude, electronics. We are importing huge things from the foreign markets, due to which there is high demand of the US dollars. And as the currency depreciates, so you will see higher large FIs outflows. So let's proceed to the second reason, which is high FI outflows due to the low growth. So what's happening in the market is that RBI cannot cut interest rate due to the high food inflation, due to which the growth is suffering. They needs to maintain the high interest rate, because if they cut down the interest rates, it will simply lead to the inflation. So they cannot cut the interest rate, whereas now industries have started suffering. There is not much demand in the economy. If you see, automobiles are struggling, FMCG is struggling, every industry is struggling. So due to which there is lower demand has leads to the lower profits, and due to which there is lower EPS and the market shares are going down. So our economy has stuck in a rut. So although government will needs to infuse the liquidity in the market at some point, they need to lower down the interest rate. So in the future, what will happen? As Jeremy Powell yesterday said, that they will be cutting down the interest rate, but on a slower pace. Due to which, what will happen if the Indian markets, if the RBI cuts interest rate like 0.50 basis points on a higher trajectory as compared to the lower, so the rupee value will appreciate in the future, because of which FIs inflows will come into the market. So if you have the vision of like 1 to 2 years, you can stay invested in the market, and you will make a good amount of money. There are a number of companies which are basically available at the lower valuation. Some of them I have discussed on my previous videos as well, such as Reliance, PVR, Inox, and Hindustan Unilever. So there are multiple large cap companies, Asian Paints. So these are the companies you could study, because the return is higher and the risk is very low on these companies. The management is good, so it will make you generate huge returns in the market. It's just that you need to be greedy when everyone is fearful, as Warren Buffett said. Okay. Happy investing, guys. Have a great day. Bye bye.